Hi, everyone. This is Jackie Cooper with both GBA Talk Show as well as Crypto Mom 2. And I want to thank everyone for hopping on and also remind everyone, especially in the GBA community, to subscribe and to connect with us. We are all about education. And so before I get into any of the topics that we're going to be talking about today, I have to do my normal disclaimers. This is not, legal advice, not investment advice. The purpose of the show is all about educating everyone about what's going on in the community. And for those that are in the blockchain community, we all know that there's a lot happening on a daily basis, both from the business perspective as well as the regulation side, as well as, just the development and the entrepreneurial side. And that's what excites me most about being involved with this community, is that there's a lot of creativity. And everyone who I talk to, it has a different side, different element. And I know personally from my own path and my own journey, I've not come to this path from the straight and narrow. And I know that Gregory, who I'm about to introduce in a second, he also has a very diverse background. For those that might not know about me and might be new to GBA or even Crypto Mom 2, my background is that I'm a lawyer, but I'm also an educator. And I'm a blockchain consultant, both by intent as well as by default. So I am involved with a lot of different things, and it's exciting to me to have my hand in a little bit of everything from NFTs to Bitcoin mining to you name it. Because as an educator, I know that being involved with doing things also means that I have an idea as to both the challenges involved, as well as the excitement of being part of this industry and community. So with that, I want to welcome Gregory Johnson. He actually has such a diverse career, both in business as well as in education, and in the fintech side, the blockchain world, just a little bit of everything. And I really want him to help with the introduction, because I don't want to leave anything out. He is actually very creative, and he's networked in this industry for a while, but he's also been a visionary in this industry, and he's guiding people and he's mentoring people. And with that, I want to welcome you to the GBA Talk Show. How are you doing today?
It's terrific to be with you, Jackie. Thank you very much for having me, and certainly thank you, and thank you to the GBA leadership team for just an incredible volume of content that you all have produced in multiple channels, in multiple places. Just a tremendous amount of very timely and actionable thought leadership coming from you and others at GBA. So it's a pleasure to be with you tonight.
Yeah, I would agree. GBA actually, it started a number of years ago, and I know that you were at the beginning as well. And they're very thoughtful about the content that they want to share, because they want to bring people along who are new to this area, as well as to have a lot of conversation with those that have already been involved and who are involved with use cases. So I know you have a project that you are working on right now, but you've also been involved with a lot of different things. But before we even get to that, what's your background? I mean, share with everyone how you.
Sure, I'm happy to give you just a little sample of that, but thank you. So, like many people that have found their way into the digital asset space, I come from a very extensive career in traditional financial services. And more specifically, I was involved as a CFP, a certified financial planner, both in private practice and then in executive roles for almost 25 years with American Express, and then before, during, and after their spinoff that became Ameriprise Financial. I served for about 5 years on the board of directors for RiverSource Life Insurance, so I have a little bit of that life insurance and actuarial kind of a lens that I can bring into the conversation maybe a little bit later if there's time. But I will say that I've been very, very fortunate to have those experiences help to inform how we think about the business here today, both at Rubiconcrypto, which I'm a co-founder and the CEO of a new venture. Well, not new now, we're 2 years in, so we're not new anymore. But I also, I've got my hand in a few different places. I'm very proud to contribute in a very active way at the Bretton Woods Committee, one of those organizations that's really looking to preserve the legacy of international cooperation as it applies to economic affairs. There's never been a more important time for the work of Bretton Woods and also for GBA. I'm also an adjunct professor at NYU, where I lecture at the nexus of innovation, technology, and disruption. So no surprise, we talk a lot about distributed ledger technologies, blockchains, et cetera, in the course of the curriculum with my students. And that's about it. I think that's enough for everybody to get a sense of maybe the different perspectives that I might bring into the conversation.
So I know that there are newbies who are listening, as well as those that are more experienced, but
Sure.
explain from your perspective the distributed ledger use cases that are going to really impact how we might be approaching different scenarios. I know that you were talking about American Express, and I know that that industry has been looking at this for a while and kind of hopping over, but where do you see this going?
Well, I see. First of all, I would say a couple of different things. We're having this conversation, you and I, and anybody that's willing to invest the time to listen to it, at what I believe will be viewed many years from now, decades from now, maybe a century from now, as a very, very important time in the evolution of money in humanity. This is really for the first time that technology is creeping into the notions that we have about money, about medium of exchange, about all those topics. And we're very busy. We have a lot going on as humans today. But the reality is, if you take a step back, if you zoom out a little bit, you cannot deny that this is a moment in time that is historic. And so I guess the first way I would answer the question for you is to say, if we did nothing else, the role that blockchains and their cousins in crypto and so forth have already had on the remittance industry, one of the most important industries in global GDP, the role it's already had to disrupt that industry, to make it more convenient and less expensive for hardworking people across the world to send money back home, it's staggering. I didn't know this until fairly recently, but there's really interesting work going on in Washington, D.C. at groups like the Atlantic Council, where I also contribute. But it might surprise many of the people that when I speak to them, it surprises them. So perhaps as well tonight. But for most of us, we give no thought to this. But global GDP, the total amount of global GDP that's connected to the remittance industry, the exchange of one monies going home to the other, everybody taking their share, et cetera, it's well over 1 full % of global GDP. To put that in perspective, that's well over $1 trillion with a T, $1 trillion. The country that receives the largest volume of remittances being sent back to the native land is actually Nigeria. So the point is, what we've already seen from blockchain innovation, just to influence and disrupt what has been an absolute monopoly, really, on the remittance industry, I think is worth note and more than a footnote in the annals of financial history. However, we're not done yet. When I think about where blockchains are really starting to also add practical value, it's in the less sexy things that everybody in the media wants to talk about. When you think about the use of blockchains and actually having an immutable record that is decentralized, that cannot be altered. Let's leave quantum computing out of it for now tonight, can we? So let's leave that out for now. But when we talk about that, just think about what that does to anything having to do with title and ownership of land, of goods, of real estate, of property. And there's another place where we're seeing a massive impact. And we are talking in a GBA forum. And so we're talking about government blockchain and related matters. Well, my goodness, you couldn't have more of a disruption to the conversation taking place by sovereign nations, by concerned citizens, by lobbyists, having to do with the influence of blockchain technologies and the evolution of money. And of course, I'm talking about central bank digital currencies. I'm talking about stable coins. And that's just to name a few. These are the real big buckets that are taking place right now. And if we go further down, virtually every company is having to review how these technologies may or may not disrupt their business. May I just say one thing before I take a pause?
Yeah.
I mentioned this in a briefing that I did not too long ago in Washington, D.C. And my personal belief is that the state of where we are with blockchain, their full utilities, their impact to society, disruption to business, we're at a stage where there's many things that we know. There's many things that we know we don't know. And there are even more unknown unknowns. I can't take credit for that. That was actually a former U.S. Defense Secretary that made that statement after assessing a conflict that was in progress. But I'm being very serious right now. I don't think we don't know what we don't know. The notion of unknown unknowns. And after all the work, all the energy, and everything that else is going on, I actually believe we're just getting started to figure out what the unknown unknowns are. I'm not trying to be cute. It's really an important thing to think about because so much time, energy, money is being spent in the space. It's important that we maybe think about it through that framework. That's my opinion, at least.
So you shared a lot of things, and I'm going to try to unpack it as we go. So towards the end of what you were talking about, you mentioned stable coins.
I did.
And one of the things that I've been following this week is, and being a lawyer, I understand the need for regulation, but I also, being an entrepreneur, I know that within this space, there needs to be the ability to create. At the same time, we need to be able to protect consumers.
That's
but
right.
with stable coins, I'm seeing how the SEC is starting to look at the stable coins, and the challenge that I have with some of the platforms that they're saying, the SEC, that the stable coins maybe should be considered as securities, or there needs to be, a pause or rethinking this, is that rabbit hole that you talk about. The stable coins and coins that might be created by governments are seen. Yeah. And you can regulate those coins and you can regulate the platforms. But like you kind of also mentioned, you have individuals who are remitting money, coins, possibly, whether it's Bitcoin or another currency, back home. And it ends up being less expensive to them, that they can then share funds back to their family. You have this conflict, in my mind, a conflict of interest of the regulators regulating to try to protect, at the same time that you have individuals and families trying to support those that are in other countries. And then you have the confusion and communication between the platforms, the countries, and what is, who are you actually protecting? There's so many layers in this. Yeah. What started off as simply creating a coin so that way you can send money to help someone else ends up having all these layers on top, becomes very complicated. And then as an entrepreneur, I'm thinking, who would want, or how do you create something new that might have liquidity behind it and not know that the laws are not going to change tomorrow, and that you might be out of compliance with those laws? So it's like you're trying to future plan and you can't. So there's so much going on here. I don't know what you want to unpack first.
Well, you talk about unpacking. There's a lot to unpack with what you just said. The way that I try to look at the state of the industry beyond unknown unknowns, because that's really what you're describing, right? We don't even know But the way that I try to describe the industry, and certainly how we try to contribute to it, is to be pragmatic and thoughtful, and to not be on one side of what has been largely a very polarizing conversation. You have crypto maximalists, championing everything about the existing system is horrible. That's not true. That's not true at all. And then you have a very established central bankers, academics, and economists who can't possibly imagine a world in which some of the technological advances driven by blockchain and their cousins could radically change notions about money moving forward. And I'm a centrist. And I think we try to be as an organization at Rubiconcrypto. But let me go a little bit deeper into that, if I can.
Yeah.
When you think about what's taking place, it is right, and it's amazing that the brilliance of the Satoshi white paper that is often overlooked was the ability for the first time to bring existing components of technology and innovation, to sew them together, to quilt them together, to be able to have this decentralized movement and exchange of value without a centralized body involved. And so we can get into the philosophical and environmental impact of what the protocol was from a proof of work. The reality is it's a remarkable breakthrough. Too often, though, the maximalists will argue that, the world is awful. Everything about the current financial system is awful, awful, awful. And I just don't share that perspective. As a matter of fact, especially in the Bretton Woods institutions and post-World War II, with all the faults, with all the warts of that system, all the legitimate critique of the system, there has never been a period of greater prosperity in mankind. I don't care who you look at and what data you look at. Of course, would we like no poverty to be the case? Is there still much more work to do to deal with economic inequality? I think we have very short memories about how we think about division, about how we think controversy, how we think about how things were in the good old days. I could wax poetic on and on, but I just got the punchline is the good old days aren't as good as you think they are. I used to pull a trick whenever I was speaking back in the wealth management industry, and I would read a number of headlines, and folks would automatically assume they were current headlines. And they were headlines that were often 20, 30, 40 years earlier that fit right into the cultural narrative of that day. So we need to be more balanced in terms of how we think. On the flip side, the arrogance sometimes of really smart people, of central institutions, central bankers, central banks, economists, academics, is also not what we need at this moment. There is no question that the advance of technology has eroded the trust and confidence of many centralized institutions. And why would we think that that wouldn't also cross over into financial and monetary policies and products, etc.? And so I think we really need to have a very balanced view. And I think the thing that's missing more than anything else right now is something that you're doing your part to try and change, which is to open up conversations to a wider audience, to be a member of a global chorus of people trying to bring thought, leadership, and education. And to the extent that I can contribute to that, I'm very grateful and I'm honored. But we are behind. The threshold of understanding and education that exists about extremely complicated technologies, not to understand actually how to code, not that people need to be cryptographers, not that people need to understand SHA-256 and any of its cousins, not that people need to worry about Merkle trees and whether or not it's a joke about Angela Merkel's 23andMe account. It's not the point. When you think about a computer chip, and I must admit, I've just finished the book Chip War, and it is a remarkable kind of account of the evolution of the computer chip industry. And we need to look no further than that. The importance of computer chips, okay, to our lives is what nations will go to war for today. Not for oil, but for technological power and access to complicated chips. A few months ago, we were dealing with supply chain issues, not due to COVID, but actually due to the fact that we weren't producing enough chips to meet the demand for automobiles and many of the other smart technologies. So I look back and I say, well, most people couldn't tell you what is a chip made of, let alone how is it made, what is the process. But they understand the importance enough that they might invest in that in their pension fund, in their mutual funds, their 401ks, some of their other products across the globe. You know, people understand enough about that's important in our ecosystem. So actually, I will say what was a very bad James Bond movie, a very, very bad one, actually was Living Daylights. And it was a horrible Bond movie at the end of Roger Moore's tenure as 007. But it actually foretold what would happen if somebody demolished Silicon Valley in its prime, and if somebody else had control of that chip market. I had forgotten about that movie because it was so bad, but they actually had the kind of war game scenario in mind. I guess the reason I bring it up is to remind everybody, that we are very behind in terms of just the most basic tenets of education in the general populace. In the United States, for example, almost a little less than 80% of American investing households, despite all the hype, all the hoopla, all the regulatory clarity talk, we barely have 20% of the investing populace invested in it. So there in and of itself, we have a long way to go to get folks comfortable. And what I love about the industry, and it also drives me crazy, is the ironies. The blockchain industry, and again, it's connected components and cryptocurrency and digital assets and decentralized applications and smart contracts and NFTs, the whole ecosystem. The ironies are that these will ultimately, one day, not today, be robust, decentralized, autonomous technologies functioning in ways that they cannot today, but ultimately will. And the irony is, in my, I believe, informed opinion, is that unless there's more involvement of the establishment industry, the wealth management industry, of which it's trying to move away from, without their participation, it actually cannot grow to its true scale. Without the regulation that the decentralized component of the technology is trying to not require, without it today, it cannot get to that plateau of new achievement and success. It just cannot. I know that's hard for a maximalist to realize, but I am not an anarchist. I am a realist. And the reality is there is greatness both in what's to come and what we have enjoyed, despite it's not perfections. So this is kind of where we're at. And I'll close this thought with observing that, in my opinion, going back to the polarity of, it's TradFi and CFI, and you all are crazy in the blockchain world, and versus the blockchain and digital asset and crypto community saying, you're all washed up, you're awful, you've harmed humanity, blah, 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 blah. I got news for you. For the next 30, 40, maybe 50 years, we are going to live not in a DeFi world, not in a CFI world, but somewhere largely in between, a hybrid hi-fi world, where these emerging technologies work in parallel with the existing systems at times. They work in competition with the existing system, and more and more and more, they work as a complement to each other. And it's going to take a long time for some of these, completely, visionary, altruistic minds in blockchain, or the anarchist minds to get their way. We got a long way to go.
So again, more unpacking here. I'm going to go back to the chip war side. One of the things that you said that I thought was very interesting is not just the importance of chips, but understanding the importance of resources. Because what makes a chip, you need a resource, and that those resources are sometimes in certain countries and certain economies that need support. And so again, it goes back to not just who's controlling the chips and the manufacture of the chips, but who's controlling those resources that can then manufacture, or how do we recycle chips? Right. So there's as we develop, within the blockchain world, we're going to have to think about how do we kind of do that recycling and communicating within a variety of ways. And I also, jumping ahead to different parts of your conversation about the hybrid, I agree that is a really great model. I think that part of the challenge we also have right now, which is the reason why regulation is being looked at, is we have to think about the ethics of what's going on in our communities. Because when we see different platforms like FTX or some of the others that have kind of created certain financial challenges, it's not because of the blockchain community or the crypto community or any label we might put on it. Those are people who are acting in a way which might not be ethical and might be fraudulent or might not be thinking about the common good. And so again, the regulations, I think, are going to be put in place to kind of help us, even in a decentralized mode, keep thinking about why we wanted to create a community, and always thinking about the good involved, so.
Well, you speak about something that I think about, the notion of the brand of the industry brand. I'm not talking about branding in a Super Bowl commercial. I'm talking about whether or not we've done a good job, again, coming back to education, so that people have a more open mind to the fact that the industry is not going to be perfect for a long stretch. And I'd like to point out the obvious here, because I'm pretty good at that. The obvious is, the digital asset, blockchain, crypto community did not invent fraud.
Yeah.
Did not invent bankruptcy. I mean, you've had a distinguished legal career. You know that, and everybody else knows that. But if you listen to the media, you'd think that this was the only industry that was wrought with this type of shenanigans and bad behavior. Yeah. I would direct anybody to go look at how much the SEC spent last year paying out whistleblower rewards as part of Dodd-Frank edicts. Okay, and the reality is, it's a stunning number. It is a stunning number. Whatever you think it is, I'm willing to bet it's more than what you think, even though I've given you a tease, right? And the reality is the majority coming from crypto and digital fraud and whistleblower rewards? Absolutely not. This is just one piece of the bad actors, but it's an important piece, though, Jackie. Do you know what I mean? And it's different than the narrative. We could go to chain analysis and talk about what percent of the actual total flows of crypto volume day in and day out in 2022, it actually was a rounding error of the overall industry went to nefarious activity. It's still a lot of money. And we're finding nation states and rogue nations are supporting these rogue actors. The North Koreans have done the best job of anybody with their Lazarus hacking efforts and so forth. So I think it's important to kind of put that in perspective. Regulators have a hard job. Yeah, because right now, if you were a decentralized enthusiast, if you were in the chorus of FTX and you were a groupie of FTX and all of that, and you were bought into the DeFi and down with the government and down with central banks, as soon as you lost your money, who are you looking for? Help. And so it's just human behavior. It's nothing new. It's nothing new. Just like right now, we have people that were interested in getting involved in making maybe an investment in a project or two. And then when the markets went down, what did they do? They not only did they pause, they basically said, no, I'm going to wait for it to come back up. the same mistakes that investors have done, in tale as old as time. Instead of buying low, they buy high. So there's nothing really new to see here, except in this industry, what you are going to see is an overcorrection, an overreach, because the bad actors, just like your grandmothers or your elders in your family, whoever you are out there, may have said in the past, one bad apple or a couple bad apples spoil the bunch. Okay, well, the fictitious firm of Three Arrows, Do Kwon, and SBF are three bad apples that basically, signed the warrant for whatever regulatory clarity to be even more crystal clear, to be even more overreaching. And that is a real casualty. It is going to be the case, and the industry needs to brace for it. You talked about stable coins, and I think stable coins are a very easy target. And unfortunately, Congress is so distracted with everything else that's going on here in the United States, at least for our global audience. The United States Congress should have been poised to actually pass legislation in the United States around stable coins. But it is unlikely, based on my sources, that we're going to see that type of stablecoin legislation, to at least have something in place to build off of before the more comprehensive and sweeping bills that have been introduced, Lummis, Gillibrand, et cetera, et cetera. We have to, as Americans, be honest about where we are from a regulatory involvement and readiness perspective. I look upon Europe right now with great envy. When I think about the MiCA kind of provisions that are coming in place, I'm going to be in Portugal next week at a conference there to see what I can learn to help steward our company maybe a little bit differently, or be a better advocate for the industry when I'm speaking. I'm going to go to London after that, and I'm going to have meetings where I know I'm already going to be jealous of the fact that the FCA has done a better job providing clarity sooner and quicker. Everything from no celebrity endorsers of crypto, talking to you Kardashians, okay? All right, to more subtle and nuanced regulations surrounding this industry. And I can't help but look at some of these other regions with a little bit of envy as somebody participating as a new venture here in the United States. And that is very rarely the case in the story of entrepreneurship in the United States. But that is the story, and I didn't write it. I'm just telling it.
No, I appreciate everything that you're saying. And, it's an exciting time, but it's a difficult time for many people, just because, like you said, it's evolving so fast. And, education is critical. I know I wrote the book, The Bitcoin Cinderella, because I wanted to educate, but I also realized how static it is. And, how I have to put QR codes in there to bring people back to what's going online, because things are evolving and changing so fast. It's really hard to keep up with both the legal side and the creativity side too. Why don't you share what you're doing, what your company's all about, and again, because I think it's needed.
Well, I'll go back to what I said before about the investment landscape here in the United States, where 80% of those households have not come over. And the type of households are typically skewing older. Right now, those that are invested, have some investment or made an investment, fall into two demographic categories. The first is skews very young. It's by far the largest headcount, right? Crypto and digital assets, all of those NFT, all of the whole shooting match. It skews very, very young, the interest, the support, and the investment. However, the dollar amounts are very low per individual. On the other side of the dumbbell, and there's two very large, you picture a dumbbell, a weight, if you're not familiar. On the other side, you have the most money invested from a very small sample of households, they tend to represent the highest net worth, the so-called ultra high net worth families that have invested heavily directly into different projects. And indeed, many of them have gotten burned very badly from all of the incestuous behavior that we've seen and all of the counterparty involvement between different firms. It's just unfortunate. But that's the investment story. In the United States, the vast majority of mass affluent households and high net worth households have not come in. And what we believe is that in the wealth management industry, these people will not come in until the products available in digital assets and crypto look and feel and sound like what they're already familiar with. If they're a DIY family, it's still the products need to look and feel and sound. Many of these investors, as much as they maybe should, or how much you hear people admonishing them, they don't care about hot, cold, or tepid storage. They just don't, okay? They just want to set it and forget it and do it the way that's being done elsewhere in their portfolio.
Yep.
So until products are available and abundant that those folks want to use, or financial advisors can be educated and have those products available to distribute through their client bases, we won't see this Metcalfe law of adoption and network growth. And so at Rubiconcrypto, we saw this problem from the vantage point of being senior executives in the wealth management industry, hiring, training, and developing thousands of financial advisors, knowing how those practices operate. And so Rubiconcrypto, we've developed 3 different what are called separately managed accounts. For many people watching, they might be familiar with a mutual fund. Mutual fund is where you put your money in, you own shares of a particular fund. The fund invests in lots of different specified types of stocks or bonds typically, and you share in the up or the down, but you own a share of the fund. Our portfolios, you own the fractional exact piece of the native investments. In this case, it's crypto. So we have one that's kind of an entry-level portfolio. We have another that's a little bit more on the Web3 and dApp side of the ecosystem, and both of which, as you might expect in 2022, performed very poorly, better than the markets, I must say. Our chief investment officer, Mike Rizard, has done a phenomenal job. So we've outperformed the markets as a whole, but it's early. Can I, while I'm talking about what we do, so in other words, we manage other people's money for both individuals, financial advisors, and institutions. But I think if I'm going to talk about Rubicon, I need to talk about what we believe in. And what we believe in is common sense and rational exuberance. So the first celebrity Fed chairman was actually Alan Greenspan, who in a December speech in 1996 observed that there existed an irrational exuberance about the performance of the markets. He spoke at a dinner. There may have been some economists in the house. And what we wanted to do was to build a value proposition that was the opposite of irrational. What that means is we're open-minded to the future of the technologies. We realize that we're early. And what that means is people should have not a long-term look at the industry, but we believe it still requires the longest view. And as a result, we also believe that for the average investor, it should only comprise a sleeve of their overall portfolio, typically 2 to 3%. And that's common sense to us. That's rational exuberance. Jackie, can I ask you a question?
Yeah, of course.
I want to ask you a question. If I was your CFP, your certified financial planner, you and I are having a conversation, let's say in Washington, D.C. metro area, because that's where I was at that time. And let's say we're having this conversation. And I said to you, what, listen, we've had a good run here, but I want to take $10,000 from your portfolio. And I'd like you to consider investing in this company. It's brand new. It's going to come live in a couple of weeks here in May. And, yeah, it's named after some river in South America, and they're going to sell books on the computer. And you'll be like, Greg, I don't buy anything on the computer. What are you talking about? And you're like, you know what? You've done a good job so far, so go ahead and do it. And so be honest, are you happy with me that I put you into Amazon day one? I mean, you got to be pretty happy, right?
Yeah, I mean, the thing is, and again, I'll just say the disclaimers, none of this is financial advice, but
Or tax advice.
or
You
tax
left that
advice,
one out at the
yeah,
beginning too.
or legal advice. When companies first start, Amazon started with books, but the
Mhm.
marketplace has now expanded. So, again, companies evolve based upon where they see that things are going. So,
Well, let me also say that I am not suggesting that the blockchain ecosystem is what happened with Amazon. But what I am going to say is going back to the little kind of question I was asking you. The interesting thing is that you answered yes. I'm really glad you put me into Amazon day one. What would be more interesting is that for 13 years, every time you and I would meet to talk about your portfolio, you would be teasing me at best about Amazon being awful, that it's down, that it's flat. 5 years, I haven't seen any growth whatsoever. 13 years, I haven't seen any growth whatsoever. At worst, you may have used it as the reason to fire me. And then all of a sudden, to your point, they were reinvesting, the network was expanding, their ability to deliver value was expanding in terms of their warehouse net, blah, blah, blah. And then all of a sudden, you wished you had Amazon. I am not suggesting that the two are exact carbon copies. What I am suggesting is what led to Amazon's success, aside from relentless leadership and stewardship of the business and the model and knowing how to say no and many, many other factors, is the network scale. This goes back to where I believe we're not infants as an industry, but we are probably entering adolescence. There's a lot of growing pains to go. And so I would probably bring that up. So we manage folks' money. We provide common sense and rational exuberance in that equation. And then again, at Rubicon, we also come into institutions and we help them assess and determine how do they participate or should they participate in this whole ecosystem. So not just the assets under management.
yeah, which is very important because that analysis, whether you should take that step or not take that step, is the dance that and the conversation that needs to happen. Yeah. For sure. I wanted to share with everyone that Gregory's contact information will be in the blog below. We are going to have more than one conversation. Tonight was just phenomenal. We can talk forever about a lot of the current events and about the directions that our community is going, and we will have more than one conversation. I cannot wait to hear what you've learned from your trips overseas. I think it's going to be very interesting.
Timely, I'll tell you that.
It's very timely. Very, very, very timely. Again, there are a lot of countries that are really exploring this, UAE, other countries. So it's going to be very interesting to see how, everyone has different hands in the pie and what happens, and the support that the community gets and the restrictions that are placed on it. So It's going to be very interesting altogether. Any last minute thoughts before we sign off?
Listen, I mean, for those of you that are involved in the ecosystem, now is the time for leadership. Mm-hmm. The time to be vocal, the time to be a steward of the business. If you're on the policy side, be an informed policymaker. Yeah. If you're a regulator, be open-minded without compromising your responsibility to your constituents at the federal or at the state level. If you're an entrepreneur, please, for the love of all the gods, can you do a better job of not being tone deaf and understanding that whether it's your fault or not, our industry is on fire, and the cumulative effect of the voices that we have is not going to keep things the same. We will either use this moment to add more credibility or withdraw credibility from what is a very, very important part of the future, in my opinion. So leadership matters.
Leadership, I agree with you, and communication. It is very important for all of us to communicate with our elected officials on what we think that we want them to know, because they only, if they're not involved in the community, they only have a certain perspective unless we help educate them.
So
And
true, Jacqueline.
and just as we are struggling to stay up to date with everything that's going on, we need them to support this creativity, but in a responsible way. So
Well said. Well
yeah.
said.
So everyone, also GBA has many events, and I'm going to be putting information in the blog below. I know in May we have an event that's happening at the National Press Club, and it's a great way to network, to learn. So I'm definitely going to suggest that everyone who's curious about this hop on the links that I'll have, because that way then you can become involved. And there's also virtual events too. So definitely, participate virtually, even if you're not in the Washington area, because you can still communicate and be part of the community. So again, thank you so much, Gregory, for being on. And for everyone who's listening, as I always say on all my talk shows, be kind to yourself, be kind to others. We're all so interconnected, and we're all part of one world. Have a great day. Talk to you soon.